that have a lot of liquidity. Many people trade them, but the market also moves and their rates are not fixed, like China's yuan, where the government does special fixing. It should not be fixed. Due to this, when we look at all the conditions related to trading and eliminate them, we get 8 currencies. Number 1, we have the United States dollar, the US dollar. The dollar is the king of this market. We will discuss that further. Then we have the euro from the Eurozone. Then we have the Great British Pound of the UK, England. Then we have the Swiss franc, CHF of Switzerland. Then we have the Japanese yen, the Australian dollar, the New Zealand dollar, and the Canadian dollar. Now, these are the 8 major pairs we need to focus on to trade. Why is it important to understand the nicknames? Because when we're trading, people do not call by names, they call them by their names. Now for the dollar, it's Buck Benjamin, Greenback is her normal name. For the yen, pound, for the we have Uni, for the dollar we have Aussie, for the New Zealand dollar we have Kiwi. These different names that we get are to understand this trading language so that it becomes easy for traders to communicate with them. So these are 8 major currencies. We have also discussed their names, and you can see the symbols on the slide. Now we have understood the types of currency. Now we have 8 currencies. Now we need to trading is done in pairs. So now we need to see which we have now of pairs. For the ones we should focus on are pairs. Now what pair? So that there are major currencies, right? Those 8 major currencies. Whenever we trade against the dollar, that will major pair. It will become a major pair. For example, with the Canadian dollar, we trade USD. This is a major. Yen USD traded. This is a major pair. Euro USD traded. Major pair. Similarly, USD and USD will do. These are all the major pairs. After also minor pairs in another. Minor is whenever we trade a currency, a normal currency that we have, other than the dollar is a major currency. When we trade against major currency, including the dollar, but besides the dollar, major total. Besides the dollar, we have 7. With this against that will become minor pair. We made the pair. At least we have exotic currency pairs. Now, exotic currency pairs. What happens when we trade any major against emerging currency? In the news, we have the most USD, Indian rupees. We have a US peso, the quite popular. In the same way as we have exotic pairs, that we have the currency in the world. Among these, the economical currency focus on those 7, and the biggest king in the major, and after the dollars, oh my god, the exotic pairs follow. Now, what we do for a simple reason, we earlier highly gain for these retail and losses. No, the downside in exotic pairs is they are greatly affected by economic geopolitical news. For example, if news comes about like sanctions being implemented, now will start to crash, Pakistani rupees will start to crash, Indian rupees will start to crash. Due to any news, a problem arose. It's crash. It's not very good. We discussed earlier why we do Forex. There are liquidity participants, market participants. So when the small, this defect is also similar to what is found in crypto, that participants really are low. So they practically it, the trend calling, which have a regardless of loss, is higher. So that is why we will be focusing on makers. If there is any news, now we understood. In Forex, we trade different currencies now, but now we will understand which currencies we should focus on and why. Now, which are the major currencies? We have 8 major currencies. The 8 major currencies are those that are used the most. They are traded the most in the world, or are not pegged or fixed with any other currency. For example, if you take the Saudi Riyal, you are taking Emirates, UAE, Dubai, Dirham. Now, why is there no reason to trade them? Because they're fixed pegged to the dollar and their rate will remain the same with the dollar. In any condition, they have agreements. So what is the disadvantage? What difference does it make that their difference does not come? If the market does not move, we cannot make a profit. So now we have to trade major currencies that have a lot of liquidity. Many people trade them, but the market also moves and their rates are not fixed, like China's yuan, where the government does special fixing. It should not be fixed. Due to this, when we look at all the conditions related to trading and eliminate them, we get 8 currencies. Number one, we have the United States dollar, the US dollar. The dollar is the king of this market. We will discuss that further. Then we have the euro from the Eurozone. Then we have the Great British Pound of the UK, England. Then we have the Swiss franc, CHF of Switzerland. Then we have the Japanese yen, the Australian dollar, the New Zealand dollar, and the Canadian dollar. Now, these are the 8 major pairs that we need to focus on, which we need to trade. Now, they also have nicknames. Why is it important to understand the nicknames? Because when we are trading, people do not call them by their names. They call them by their nicknames. Now, for the dollar, it's Buck, Benjamin, Greenback. For the euro, it's Fiber. The normal name for the Japanese yen is yen. For the Great British Pound, it's Cable, Quid. For the Canadian dollar, we have Loonie. For the Australian dollar, we have Aussie. For the New Zealand dollar, we have Kiwi. These different names that we get are to understand this trading language so that it becomes easy for traders to communicate with each other. So these are 8 major currencies. We have also discussed their names, and you can see the symbols on the slide. Now we have understood the types of currency. Now we have also found out which are the major currencies. Now we need to find out that trading is done in pairs. So now we need to see pairs we have to trade. Now, there are 3 types of pairs. First of all, the ones we should focus on are called major pairs. Now, what is a major pair? Now, we understood that there are 8 major currencies, all right? Those 8 major currencies. Whenever we trade against the dollar, that will be a major pair. It will become a major pair. For example, with the Canadian dollar, we traded with USD. This is a major pair. Yen USD, JPY trade. This is a major pair. Euro USD traded, major pair. Similarly, pound traded. USD HF, USD, NZD, USD, we will do. These are all the major pairs. Then after that, we have cross-currency pairs, which we also call minor pairs in another language. Now, minor is whenever we trade a normal currency that we have, other than the dollar, which is a major currency, whenever we trade it against another major currency, not including the dollar, but besides the dollar, we have 8 major total currency pairs. Besides the dollar, we have 7. When we trade the 7 against each other, that will become a minor pair. We will say that I traded on the cross, traded a minor pair. Then we also have exotic currency pairs. Now, exotic currency pair. What we trade any major against that emerging market currency, which is not included in the 8 majors. In that, we have the most famous one, USD, INR, Indian rupees. We have a USD Mexican peso, the popular nowadays. Then we have a USD Turkish lira. In the same way, we expand, we have a lot of exotic pairs. Let me tell you that we have the tradable currency in the world. Among these, the electronic currency is all this one. Focus on those 7 ones. Among those 7, we understood that the main major is, and beginning major is the dollar. And after the top $10, all minors come, and then the rest of the exotic pairs follow. Now, why should we trade pairs? For a simple reason. We said earlier that they are highly liquid and frequent. In this, we get trading opportunity. The transaction cost is very low. Now, the downside in exotic pairs is likely affected by economic and geopolitical news. For example, if news comes out about Turkey being imposed on Turkey, now nothing is just of news. Turkey will start to crash. Pakistani rupees will start to crash. Indian rupees will start to crash. To any news, some issue arose at the India-Pakistan border. A problem of China, it will start to crash. It's not very liquid because we discussed earlier why with Forex. There are a lot of liquidity participants, market. So when the pair is small, this effect is found in exotic pairs, similar to what is found in stocks and crypto. That part of liquidity are low, they crash quickly on news. And when we trade, the transaction cost, whether bank or selling, which we have to pay regardless of profit or loss, is higher as compared to major pairs. So that is why we will be focusing on major pairs. It will also harm you. That's why we managed it properly. Now we come to trading. When open the chart, when open the mobile, we have 2 options. One is buying, other is a short position. One will be coming to you in blue. One will be coming to you in red. Is for buying and the red button is for selling. Now, what does buying mean? It means you are trading this currency, for example, USD. What the currency? You speculate that the euro will be strong against dollar. Your expectation is that it will go. What will you do? Yes, blue button, which called the buy. Similarly, when you go into a short position, you go into a selling position. Now, your selling position is such that if I sell the euro, I think we can. So I will press the red button. If we also short, we also call sell. If you do not have any opposition, then flat and will not affect you at all. We notice the asking price is the blue price and red price. There will be a difference between the spread will not. It also comes from that broke position. The market I do left to bring you to the market, and that is the way he makes money off. On this off-topic, you will see all the sponsors, social media influencers, access, SMIC markets, IG, IFX markets. They will tell you to trade as much as possible. The more you trade, the more benefit. Making commission. They probably over trade excessively. Trade you also incur losses. Yet the broker commission still earn. And when you went him, your went away. The broker is very happy. We have given an example of how to calculate. You see, example as earlier in forex trading, speculate where currency will rise or fall against another. Now, how to calculate this? How see if a currency will rise or fall, or what factor a currency will fall? Those are fundamental factors. What is GDP? How is its economy doing? How are its jobs? People getting not? The people who are working, getting higher salaries. What are their wages? What their rate? Is it a manufacturing factory or an industry factory? The economy here, how it is doing, where it is growing or not, whether its GDP is, what the projections are looking at, what rate has it sent, currency is and fall. Now, everything this is driven by a very simple formula that we call supply and demand. This is a method. It runs very soon. Similarly, economics and economic both the supply and demand for currency, and then if a currency rises and falls. Now, example of these. If you have the belief that the US economy is strong against the dollar, so what you do, the euro, you take the opposite. If you understand that the euro will weaken, the economy will be strong, you compress the euro. What is the currency and the currency? The one is called the currency. Comes inside both. Now, in this various examples, we have USD. If you think Japan's has been and Japan weakened its currency to its export, so countries that used to make the reals and so on, what will their force be? Their force be that one means weak currency. Really good. Will dollar. You think the situation people are money from the US market, stock market, or the market, you KPI. If you think the British economy will grow than you will buy BP. And if you think that USD GB, for example, USD CF, if you think USD CHF swing value of you buy the USD because in that your base currency is CHF. And if you think US economy is weakening, what will you do? You sell USD CHF, meaning the simple form to understand this. Now we did in size. Now in lots, we have mostly 3 lots. One is 1,000 units, one is 15, one is 100,000 units, where we have a base of 0.01 equal to 1,000 units. 0.10 equals 1,000 units a lot, and 0 and 0 equals 100 lot, 100,000 units, and 100,000 units. We said now this is the lot size. Now, as we discussed earlier, what is the average? Like you discussed, it's a big row, whether it's a 10 units or 100,000 units or a point, you cannot assess it. You don't have that money in your account. The broker comes between the broker average. If you are given an average of 50, meaning you can open a position of $100, $2,000 account, if it gives an average of 1 to 100. Meaning you can open a lot on a $1 account or on a position of $100,000. Similarly, when you do that, you'll get significant and significant loss. That's why it's said always manage your. Now understanding the basics of Forex. Now that we have learned about things, we have also understood the answer. Now from point of the difference means do we calculate? Mostly I have heard in our trading. Now how we calculate when we have 5 digits? For example, we have USD, where the figure is 1.521 with the P in that. The figure will be after 0 for your decimal, like we would decimal, that will be equal to 1 pip. Similarly, when we go, yen is a currency pair, which we have figures. So in that figure, our second point, 0.1, that is our 1 pip. Now, how to calculate the pip value? Now, for example, the current price 1.20. Now, how will we calculate the value? It will also you. That's why I managed it properly.
Now we come to trading. When we on the chart, when we on mobile, we have two options. One is buying and the other is a short position.
One coming to you in blue, one coming to you in red. The button is buying, the red button is for selling. Now, what does buying mean? It means you're trading, for example, Euro USD. You bought currency. Who say that it will be strong as the dollar? So your expectation is that it will go. What will you do? So you press the blue button, which we call buy button. Similarly, when you go into a short position, you into a sell position. Now your selling position is such that if I want to sell the euro, I think the euro will weaken. So I will press red button, which we call short. We also sell. Then if you don't push, then flat and square will not affect you at all. Then when you have noticed one more thing, the asking price, the blue and red price, there will be a difference in the two. Difference between them is red in the word of bid and ask. Now, the commission also comes from that is the broker's commission. There is a markup providing you to bring your trades to the market, and that is the way he makes money off. On this topic note, you will see that the broker sponsors social media influencers you have, whether they are sponsored by Access, XM, IFX, IG, or IFX markets. There are many brokers. What will they do? They will tell you outswing strategies. They will tell you to trade as much as possible. They will tell you to focus short. Why? The more you trade, the more benefit they get. They are making money from commissions. They don't care whether you are in profit or loss. Most probably, when you overtrade, trade excessively, trade without reason, you will also incur losses. Yet, the broker's commission is still earned. And when you went into loss with him, the money also went away. The broker is very happy. So now we have given an example of how to calculate the spread. You can see in the example here, as we discussed earlier, in Forex trading, we speculate whether one currency will rise or fall against another. Now, how to calculate this, how to see if a currency will rise or fall, or what factors affect a currency's rise and fall. Those factors are fundamental factors. What is a country's GDP? How is its economy doing? Are people getting jobs there or not? The people are working, getting lower or higher salaries. What are their wages? What is their inflation rate? Is it a manufacturing industry focused country or a services industry focused country? If the focus country here, how the industry is doing, whether it is growing or not, whether it is or strong, what future projections are looking at all this, what interest rate has its central bank set for it, seeing all these currency results. We know everything this world is driven by a very simple formula. It operates on a very simple formula that we call supply and demand. It falls on supply, it rises on demand. This is a very easy method. It runs very smoothly. Similarly, economic events and economic activity create both the supply and demand for a currency. And any factor of these, a currency rises and falls. Now, here's an example of this. If you have the belief that the US economy is weakening, it will become strong against the dollar. So what will you do? You will buy Euro USD. Similarly, the opposite is true. If you understand that the Eurozone economy will weaken and the economy will be strong, then you will simply go to the sell button for Euro USD. What is the concept? There is a base currency and a quote currency. Which is the base currency? The one that comes first is called the base currency. The one that comes on the second side, on the right side, is called the quote currency. Now, in the various examples, USD, JPY. If Japan's export has become weak and Japan will weaken its currency to strengthen its exports. So understand one thing, the export countries that will sell outside, what will be? Their focus will be that our currency remains weak. If the currency remains weak, the demand for goods will be good. Similarly, if you think Japan will also weaken its currency, you will buy that. If you think the situation in the US is bad, people are withdrawing money from the US market, stock or the US market, you will sell USD APY. Similarly, if you think the British economy will become stronger than the US, you will buy GBP USD. And if you think the opposite USD BP, for example, USD CHF, if you think USD CHF Swiss franc value over, you will buy the USD CHF because in that your base currency is USD and the quote currency is CHF. And if you think the US economy is weakening, what will you do? You will sell USD CHF, meaning there is a simple formula to understand this. Now, what do we trade in? We trade in size. Now, Lord, we have no accounts. We have access to lot. One is of 1,000 units, one of 1,000 units, and one of 100 units, where we have a lot size of 0.01 equal to 1,000 units. 0.10 equals 10,000 units and mini lot, and 0 and 1.0 equals one standard lot, 100,000 units and 100,000 units. We said now this is the lot size, the average. Now, as we discussed earlier, what is the average? Like you discussed, it's a big role whether it's 1,000 units or 100,000 units or a 0.1 unit. You cannot access it. If you don't have that much money in your account, then the broker comes in between. The broker gives you the average. If you are given an average of 50, meaning you can open a position of $100,000 on a $2,000 account, if it gives an average of 1 to 100, meaning you can open a lot on a $1,000 account or open a position of $100,000. Similarly, when you do that, you will get significant profit and significant loss. That's why it's always said, always manage your. Now we are understanding the basics of the Forex market. Now that we have learned about trading, we have also understood buy and sell. Now, from which point does it make a difference in money, and which points do we calculate? Mostly, as you might have heard in our Forex trading, we calculate pips. Now, how are pips calculated when we have 5 digits? For example, we have Euro ST, where the figure is 1.0521. Where will the pip be in that? The fifth figure will be after the zeros decimal or after the first figure's decimal, like we would say the fourth decimal point. That will be equal to 1 pip. Similarly, when we go to yen, dollar yen is a currency pair in which we only have 4 figures. So in that figure, our second decimal point, the figure that comes after 0.01, that is our equal to 1 pip. Now, how to calculate the pip value? Now, for example, USD CAD, the current price is 1.0200. Now, how will we calculate the value? Because the real trade is to make money, we need to understand the value of and what the price in dollars is. And according to that, we need to take the risk of our trade. Deciding lies for your trade. So the reason to learn the value of pip, to calculate a pip, is because if we don't calculate the value of pip, then we don't know how to risk, do not know how to do it. So how we determine profit or loss from it? So for example, we have USD in front of us. Now it's 1 pip value. Pip is like we run the 4th decimal point or the 5th numerical value is 0.001. So what will the current value price of be taken? For example, if the current price of USD CAD is 0.020, then we will divide the pip of 0.01 by 1.0200. So equivalent price is 8. This is about a lot. So this is our value. This impact us. This how we calculate this. Now, in number 2, this step again. We have second decimal or the third numerical. So when we are in, we will divide that 0 by the current of is 1, 2, so it would be 0.0003, meaning in case of 1, its valence will be 0 point. Now we understand how to calculate the value of pip in this. The value of the trading USD will calculate in dollars. How we calculate in calculation the value of GBP. Now using the same value by 0.3, I divide by current price in USD. I divide upon the USD, we get value USD. We get 674. If we divide 0.390, which is an example of pound US at the moment, our value of pound yen at the moment it was $1.7 per pip. So first we calculate the value. Then we learned how to convert into dollars. This is called converter. Is in engines house. For example, using our account. Our balance is $80. For example, we calculate 0.8. Now we have to we have to divide 0.9 current USD. For example, if current price is 0.700, then value will be 1282 or N. So this is a very simple calculation. So for understanding, especially in our section, it's PIP calculation. You can go shit. Because their trading is to make money, we need to understand the value of pips and what their price in dollars is. And based on that, according to that, we need to take the risk of our trade. Deciding the trading size for you trade. So to learn the value of how to calculate. If we do not know how to calculate the value of PIP, then we do not know how to manage risk. We do not know how to do its calculations. So how we determine profit loss from it. So for example, USD in front of us, now we take one PIP value. When we run the fourth decimal point of numerical value 0.01, so what we do, the current value price of USD will be taken. For example, if the current price of USD CAD is 0.1.0200, then we will divide the PIP 0.001 divided by 1.000. So this is about a growth. So this value, this price will pass, this will calculate pips. Now, example number 2, discuss the pound against yen. We have a decimal point or the third numeric value as the pip. So when we are taking that pip to yen, we will divide that 0.01 with the current value of is currently at 123, for example. So our frequency will come out to be 0.0003, meaning that if we have a trade of 0.1, a lot of 0.1 or 10,000 units, its equivalence in price with 0. Now we understand how to calculate the value of a pip in this. Now the second question is about the PIP. For example, we are trading pound yen. In that, US is not available, so we need to calculate it in dollars. How will we calculate it? For its calculation, we will go to the value of GB pound. Using the formula, we will divide 0.3 by the currency of 1 USD. By dividing on the USD, we will get the value in USD. We will get 164. You divide 0.31.590 with an example price of pound US that our PIP value will come out for pound at the moment equals $7 per PIP. So first we did the value, whether it was in dollars or not. Then we learned how to convert it into dollars. This is called conversion. It's used in every conversion of ours. Now, for example, use dollars into our account. Our account calculated dollars. What value did we calculate? 0.8. Now what do we have to do? It divides 0.9 by the price USD. For example, if its current price is 0.700, then its value will be 1.58. So this is something. For further understanding, we have a special video in our separate section. It is made solely on PIP. You can go.
We now discuss how to demo trading. Until we succeed, we must achieve success in demo trading. To achieve success now, why we have to do demo trading? You have all the functionality features of the live market, except your real profit. You pay more of the trade planet. Trading system, there's no profit, so it does not compete. You can follow the basic logic. So now, how long do demo trading? Okay, to be consistently profitable. You have to take this value that I will trading until the profitable system. When I have done that, then I will real line. But I will not trade my real money and will develop it profits for doing and trade. You have to know that I will not money. I trade and develop a profitable system before with real money. You lay hand on your head. I am smart and patient. Traders not on a live account trading profit on a MO account. Understand this. Efficient, then if you don't have patience and then trading for them, how to develop trade and more trading. Since that the time we to focus on one at a time. Of each currency pair is one but another. Now we differentiate between two strategy on which so we'll do multiple we will be able to system. So focus on one principle unless and until you constantly profitable, no other and choose better use pair types because initially pairs need to focus developing good habits to enhance your trading process. Initially, you should not focus on profit. You focus on process. Focus on the process. You know you are doing wrong now. University and on many understands that I have to go required the trade and I will plan system that will be constantable. So you go through the process of now the question is now the works to reach in Forex trading. And keep your expectations realistic. Average small account is large lots. Benefits and fit. So you need to re-expectation this. And Forex traders and all trades lose money. Because brother, not 100%. I was too familiar with the why am I not in business of trading and ratio of 6%? But we have 100% is still. This is not stable. This does not exist in the world. Oh, if you change this, you will know those strategies that are giving you a 60% ratio. So the truth is, people's expect 90% of people lose money in trading. They have no train, no they haven't created trading. There is no trading system. They have no understanding of management. They never think that we will profit. We traders, we are understanding that will include profit will come. And not being perfect. It should go directly into. Should not include. So you not remember, trading is not for the unemployed. Those with low income need to credit card debt or afford electricity. Trading is absolutely not for them. It's okay to make a living from trading. Pressure on trading. We need to understand market is ATM. The market trade will under when things generated we trades. If not generated, we will place trade. If we impose our needs on the market, it does not give. We will force trades. We need the money. So what will happen is that the market will take all the money. You will because it's gold and. Because it moves a lot and payment of Forex and money, we might think, oh, and the money. Understand this successful percentage of traders. So the problem is that many new traders come with misguided hope realization. They come with expectation they make a lot of money, but they lack the discipline to get to money. They don't want to learn art of trading. They don't want to learn the skill of trading. If we do that, we will make money. Our making money. The Dawid's more years in university. You take him to the pilfer die. You haven't learned art of trading. What will happen? Or your account definitely be zero 130. No, yes. Goal. If your gamble worked through your trading, trade date of the obviously get racism. He has money. He invests money. Lose. Trading is getting but more also understand that this might cause losses for us. We are trying to earn money from whom? Basically, when we earn, someone loses. If you're winning, someone is losing, and the other party that is against you are institutional traders that have 20 years of experience, 10 years of financial education, and the highest tools that give them data, the highest algorithms and make programs that help them money. So and highly qualified self. So how do we make money in environment? We have to work time. It is important to understand that trading is not just about earning skills. You have to control aspects of your psychology, develop discipline. If your fear account it is only and only turn mysteries. Especially I say you should not even ever. So you discuss that when you will and do work. Consider it when you will say that there are no side effects. And you learn everyone is talking special on the market. I once went there and made some money. The second time I went traded so much money, but it's all bullshit. You bullshit. So do focus on trading, if not focus on trading. If you can yourself questions, why to you trading and you donate money to the market, donate money to the academy, so you keep educating the masses to do money and actual trading. We discuss how we should do demo trading. Until we succeed, we must achieve demo trading. After that, we have to achieve success in a real account. Now, why do we have to do demo trading? In demo trading, you have all the functionality and features of the live market except your real profit and loss. You can develop a more objective trading plan in it. Your trading system, because there is no profit or loss, so greed does not come in between. You can follow the basic logic. So now, how long should you do demo trading? Okay, at least until you become consistently profitable. You have to take this vow with yourself that I will do demo trading until I can develop a solid profitable system. Once I have done that, then I will stay on the real money line. Before that, I will not trade my real money and will develop a solid profit system for demo trading and demo trading. You have to take this oath that I will not lose my money. I demo trade and develop a profitable system before with you and your head. I am patient. Forex traders do not open a live account and concentrate on a demo account. Understand this. If you are patient, then at least if you don't have patience, at least do demo trading for 1 month. Then we will discuss how to develop a trading plan in demo trading. The second thing is that we need to focus on one time. If we focus on one strategy works on one, but not another. Now we fit between two. Which strategy works on which we will be able to develop a system So we have to focus on one currency pair unless and until you become consistently profitable with one pair. Do not add another pair. And now choose better, use pair title spreads and less chance of slippage, because initially your extra cost compares much better. Then you need to focus on developing good habits to enhance your trading process. Initially, you should not focus on profit and loss. Your focus should be on the trading process. Here, the focus on the trading process will become certain. You will know whether you are doing it right or wrong. Now, a doctor goes to university and he is studying university. His focus is not on making money, of course not. And he understands that, or I have to go through the learning. After the trader needs to understand, I will develop a system consistently profitable on demo trading, so I will make you, but I have to go through the process of make that. The question, the biggest problem is what? Now the world asks, can you risk Forex? The answer to this is you have to keep expectations stick, because in an average account, you place lots. There are benefits and drawbacks to it. So you have to maintain your realistic expectations, understand this. And Forex traders, and we do, his brother on the hunt, they didn't be here in front of you with us. I was going to Hakka have dinner with the famous Trump. Now, why am I not involved in business? Because the reality of trading is you can have a win ratio of 60 to 70%, but having a 100% is impossible. This is not possible. This does not exist in the world. Well, if you cheat this, what will you do? Those strategies that are giving you a 60 to 70% ratio. So because of this, the people's expectations are wrong, and that 90% of people lose money in trading, lose all their money because they have no planning, no training, no discipline. They haven't created a trading edge. There is no trading system. They have no understanding of money management. They never think that we will incur a loss. They always think of profit. We traders, we are traders. Risk management is about some understanding that we will incur a loss first, profit will come later. Then if you always have the habit of being perfect, I should get perfect entries. If I trade, it should go directly into profit. I should not incur a loss. This thought comes to your mind. You cannot manage them, so you cannot trade. And remember, trading is not for the unemployed, those with low income who need to pay rent, credit card debt, or cannot afford to pay the electricity bill or to eat. Trading is absolutely not for them. It's okay if you can't make a living from trading, especially if you put pressure on trading, because we need to understand that the market is not an ATM machine. The market will give us trades. We will develop a trading plan, a trading system. Under that, when trading signals are generated, we will place trades. If a signal is not generated, we will not place trades. If we impose our needs on the market, if the market does not give us a signal, we will force trades without logic because we need the money. So what will happen is that the market will take all the money you have, you will incur losses, and your account will become zero. It's gold. And because it moves a lot in trend. If you come into Forex and man, as a beginner, you made some money with lucky trades, then you might think that all traders in the world make a lot of money. But understand this, success is for a very small percentage of traders. So the problem is that many new traders come with misguided hope and realization. They come with the expectation that they will make a lot of money, but in reality, they lack the discipline needed to make money. They do not want to learn the art of trading. They do not want to learn the skill of trading. Just want to make money. Basically, trading is less. If we do that work, we will make money. Our focus is on making money. We don't learn the work. So, of course, the doctor who didn't spend 4 years in university hasn't learned medicine. If you take him to the operation theater, the patient will definitely die. Similarly, if you haven't learned the art of trading, the trading skill, what will happen? Your account will definitely be zero with 100% guarantee. No doubt that yes, gamble. If your gamble worked and you withdrew your money from trading, from now on, you can go on with the trading date of this game. But obviously, when a gambler gets a lucky break, places a bet, he has money. He doesn't quit gambling. He invests the money, loses all of it.
So trading is not a get rich quick scheme. What is the reason for this, brother? Because, brother, the level is higher.
The level at which we make more money. But when more money comes, more money also goes. So we need to understand that this market causes more losses for us. We are trying to Earn money from whom? Basically, when we earn, someone loses. If you're winning, someone is losing, and the other party that is against you are institutional traders that have 20 years of experience, 10 years of financial education, and the highest tools that give them data in the highest algorithms actually put trading because need to them is not an 18. The market will give us its trading system, and when trading signals are generated, we will place trades. If signals generated, we will place trades. If we impose our needs on the market doesn't give us a signal, we will force trade without logic because we need the money. So what will happen is that the market will take all the money you have, and because it moves a trend. Moja, man, as a beginner, I some lucky tried that will trend like money. But understand this is for a small percentage of traders. So the problem is that many new traders come with misguided hope and realization. They come with the expectation that they will make a lot of money, but in reality, they still need to make money. They do not want to learn the art of trading. They do not want to learn skill of trading. Just make money. Basically, trading is if we would like to make money, our focus is on making money. We don't learn, of course, who didn't foresee hasn't medicine. If you take trading theater, you will definitely die. Similarly, if you haven't learned the art of trading, the trading skill, what will happen? Your account will be with the hunt out against yes. Gamble. If gamble, you withdrew your money from trading. Or more on with the trading data game. Mostly when it gets a lot of places money. He doesn't quit gambling. He invests money, lose it. It's a get quick scheme. His brother, the level should make more money. But when more money comes, more money also goes. So he understands that market for us. We are trying money from it. We earn, some loses. Losing. The other party that is institutional traders that have 20 years, 10 financial highest tools the data in the highest algorithms, making programs, strategies that help them make money. Over 1% against a team of highly qualified people. How do we money? We have to work. Thank you, Pils. And important to understand that trading is not a learning skill. You have to control psychology, develop this in. You have to control your account, have on to zero, only and only of us. When you trade wiped out, only to their own sort qualities. Actually, leverage. I would say shoot with a leverage. On leverage. We still learn this. You will work hard, time, and do hard work. Consider not of work, then you will say there are no side effects. You will know to learn. Everyone is talking nonsense. I can do it. I am special. I once went there and made so much money. The second time I went there and made so much money. So that's and it'll come shit. So it's better to do what just focus. If you cannot on trading. If you cannot control yourself, stick to expectations. It's to you. Instead of wasting money just trading and you want the money that you are going to donate to academy so you can educating the masses so they don't lose money and actual trading. We will now discuss how we should do demo trading. Until we succeed, we must achieve success in demo trading. After that, we have to achieve success in a real account. Now, why do we have to do demo trading? In demo trading, you have all the functionality and features of the live market except your real profit and loss. You can develop a more objective trading plan in it. Your trading system, because there is no profit or loss, so greed does not come in between. You can follow the basic logic. So now, how long should you do demo trading, okay? At least until you become consistently profitable. You have to take this vow with yourself that I will do demo trading until I can develop a solid profitable system. Once I have done that, then I will stay on the real money line. So we have to focus on one pair unless until you become consistently profitable with one other pair. And now choose better, use pair title spreads and less chance of slippage, because initially your extra cost compares much better. Then you need to focus on developing good habits to enhance your trading process. Initially, you should not focus on profit and loss. Your focus should be on the trading process. Here the focus on the trading process will become certain. You will know whether you are doing it right or wrong. Now a doctor or engineer goes to university and he is studying in university. His focus is not on making money, of course not, man. He understands that, or I have to go through the required period of learning. After, I will make you see the trader needs to understand that when I will develop a plan system that will be consistently profitable on demo trading. So I will make you, but I have to go through the process of making that. Now the biggest question, the biggest problem is what? Now the world asks, can you get rich in Forex trading?
The answer to this is that you have to keep your expectations realistic, because on an average small account, you place large lots. There are benefits and drawbacks to it. So you have to maintain your realistic expectations and understand this. And Forex traders, and we do mean all Forex traders, lose money on some trades. Because brother, if someone had 100% ratio, then I wouldn't be sitting here in front of you with this course. I was going to Hakka have dinner with the famous Trump. Now, why am I not involved in business? Because the reality of trading is you can have a win ratio of 60 to 70%, but having a 100% is impossible. This is not possible. This does not exist in the world. Oh, if you chase this, what will you do? You will ignore those strategies that are giving you a 60 to 70% ratio. So because of this, Tiki, the people's expectations are wrong, and that 90% of people lose money in trading, lose all their money because they have no planning, no training, no discipline. They haven't created a trading edge. There is no trading system. They have no understanding of money management. They never think that we will incur a loss. They always think of profit. We traders, we are traders. Risk management is about some understanding that we will incur a loss first. Profit will come later. Then if you always have the habit of being perfect, I should get perfect entries. If I trade, it should go directly into profit. I should not incur a loss. This thought comes to your mind. You cannot manage them, so you cannot trade. And remember, trading is not for the unemployed, those with low income who need to pay rent, credit card debt, or cannot afford to pay the electricity bill or to eat. Trading is absolutely not for them. It's okay if you can't make a living from trading, especially if you put pressure on trading, because we need to understand that the market is not an ATM machine. The market will give us trades. We will develop a trading plan, a trading system. Under that, when trading signals are generated, we will place trades. If a signal is not generated, we will not place trades. If we impose our needs on the market, if the market does not give us a signal, we will force trades without logic because we need the money. So what will happen is that the market will take all the money you have, you will incur losses, and your account will become zero. It's gold. And because it moves a lot in trend. If you come into Forex and man, as a beginner, you made some money with lucky trades, then you might think that all traders in the world make a lot of money. But understand this, success is for a very small percentage of traders. So the problem is that many new traders come with misguided hope and realization. They come with the expectation that they will make a lot of money, but in reality, they lack the discipline needed to make money. They do not want to learn the art of trading. They do not want to learn the skill of trading. Just want to make money. Basically, trading is less. If we do that work, we will make money. Our focus is on making money. We don't learn the work. So, of course, the doctor who didn't spend 4 years in university hasn't learned medicine. If you take him to the operation theater, the patient will definitely die. Similarly, if you haven't learned the art of trading, the trading skill, what will happen, or your account will definitely be zero with 100% guarantee. No doubt that a guess. Yes, gamble. If your gamble worked and you withdrew your money from trading, from now on you can go on with the trading date of this game. But obviously, when a gambler gets a lucky break, places a bet, he has money, he doesn't quit gambling. He invests the money, loses all of it. So trading is not a get-rich-quick scheme. What is the reason for this, brother? Because, brother, the level is higher. The level at which we make more money. But when more money comes, more money also goes. So we need to understand that this market causes more losses for us.
We are trying to earn money from whom? Basically, when we earn, someone loses.
If you're winning, someone is losing, and the other party that is against you are institutional traders that have 20 years of experience, 10 years of financial education, and the highest tools that give them data in the highest algorithms and programmers. They make trading programs according to strategies that help them make money. So we are 1% against a team of many and highly qualified people, time qualified self. So how do we make money in this environment? We have to work time hard. Thank you, peoples. And it is important to understand that in trading, it's not just about learning skills. You have to control aspects of your psychology, develop discipline. You have to control your fear, because if our account has ever gone to zero, it is only and only because of us. When new traders' accounts get wiped out, it's only and only due to their own mistakes or qualities, especially high leverage. I would say new traders should not even touch high leverage. Keep one-to-one leverage. So you will learn trading. We discussed that it will take time to learn this. You will work hard, spend time, and do hard work. Consider it as an art of work. Then you will say that there are no side effects. Anyway, no need to learn. Everyone is talking nonsense. I can do it. I am special. Understand the market. I once went as a trader and made so much money. The second time I went as a trader, I made so much money. So that is all bullshit, and you will become bullshit. So it's better to do what just focus on.
Trading, if you cannot focus on trading, if you cannot control yourself, cannot stick to expectations, my advice to you, instead of wasting money just trading, and if you want, you can donate the money that you are going to waste in the market, donate that money to the academy so we can keep educating the masses so they don't lose their money and actual trading.
Later. Now we come to the stop order. As we discussed, will the stop order always be above or below the price? It will always be ahead of the price, because when the price moves in that direction, as we discussed earlier, then we enter.
We will do it. Now we come to it. We have learned the entry. Now, what are the ways to exit? For example, I have opened the position.
Now I have to close that position. Now, how do I protect that position?
Against my intention. First, I'll enter a trade with the intention that we will make a profit. But if the trade goes against you most of the time, for what you have to do, we have two types of orders. One is a stop loss order, the other is stop loss. What is a stop order? For example, whenever an order was a market order or a pending order, it was a limit order. Now I have set loss. If the price beyond that, I don't care. I will accept my loss and my position will close. But what is a stop? A trade stop is when, for example, you can trailing stop activate. When it moves in your intended direction, whether you have a buy or a sell, when the price starts moving, when you want to do. If you set a stop, for example, is 10 pips, your trailing stop will activate. Now, if the price goes to 20 pips, the stop difference will remain 10 pips. That the price is moving your intended direction, so trailing stop. Someone is told that fall behind. So as much as the price, it will move back by 10 pips. So whenever the price comes back, your stop loss with, and for example, the price comes, your stop loss is your position of break. What's the advantage of a limit order? It enters only when the price comes back. What is a stop order? It takes different two. The advantage of a limit order is given. And what is the advantage of a stop order? If successful in execution of breakout, if more pips. Then, apart from this main order, there are also some other orders in Forex. One such is good till this is another type. Then an order, for example, set a buy limit. We have the option to choose the GTC option, meaning cancel this order, buy limit, stop or limit. Whenever price after or 1 year reaches there, this will be activated. So what is the option? GFE means if the end of this is triggered, this price will expire. If this order is not triggered by the day, it automatically be. We call that order type sub-order type. Good for the day. Then we learned GTC, good GFT, and we learned, and then after that OCO. For example, I placed a buy and buy stop. So I have also set a stop. This news an event of the market invalidation. Action is if it up, it will keep. It goes down, going on the downside. So I have set buy stop and I have added a one cancels the other. When one trigger, there will be a sell stop on both. The sell stop, the buy automatically. If the buy stop is activated automatically, the stop will be. That's our type OCO. One cancel trigger the second example layering or happen multiple positions activated. Activated. So have another sales stop limit. We have two. Now our limit will come back. We are is at US 150. Now a split price touches 140. We'll sell from there. That up. We have, for example, we have PP with I have buy from the price will break. It will go 152. I have to stop, set the limit at 150. If it comes back to half of it, my order will open. And if it does not go up and comes back to 151.9, my order will open. Advantages of the market, you get the execute. There is a high probability the order fail. Side effect if there is a news event happening or the market is moving very fast, the process we pressing the button execution will occur. Become 10 or 20, we could sleep. So the chances of this in market execution order type in a fast moving market are now if a limit order with your area there's no space. But with this type very and your execution guaranteed. However, whenever it will be at the exact place you need them. Next, stop order. Order have no confusion. Market is moving in a fast direction. By the time your order is triggered and pressed, demand has gone to the market. So difference in the this order. So limit orders. Stop orders in very fast moving markets are dangerous. Has DFD and are all these order types. We categorize order type. For I stop till held until it goes, but category I will get. And will for that way. It might be after this time order with addition the from two stops, as I discussed here. These are all the advantages and disadvantages. These are all right. These main order types, you further edit them. These are such orders that such orders are never used with any buy stop sales. Next we come.
Now on the stop order. As we discussed, we'll stop order way above the price, or with the head of the price because my price moves that direction. We discussed earlier. And
now we come to we have learned the what are those exits. For example, I have opened the position. Now I have to close that position. Now how I protect position? My intention is to trade with the intention that I make profit. But if the trade goes against you most of the time, for what you have to do, we have two types of orders. One is a stop order, and the other is trading stop loss. Stop loss, for example, when I open whether it's market order or head order, ending it was a limit or stop. Now I have set its stop loss so that if the price goes beyond this exact area, I will incur a loss. I will have my loss and my position will close. But what is trailing stop? Trailing stop is when, for example, you have set up 10 pips. When does the trailing stop hit? When it's in your intended direction, where you have, let's say, a buy or a sell. When it starts moving in the direction you want, what should do? If you trailing stop for when the price reaches 10 pips profit, your trailing stop will activate. Now, if the price goes to 20 pips profit, the stop loss will 10. That means the price is moving in your direction. So, trailing stop, some is that it behind. So, such as the price forward, it will move back by 10 pips. So, whenever the price comes back by 10 pips, your stop loss will be hit. And if, for example, as soon as your stop loss is activated, you will incur a loss at your entry price. Your position will close even. What's the advantage of a limit order? There's only one order. It waits when your price goes up. So what does it do?
The advantage of a limit order is that it gives a price.
And what is the advantage of a stop order? If you are in your expectation of breakup, it pips. Then apart from that, there are also other orders found for Forex. One such order, GTC, good. This is an order type within an order type. Example, we set buy or sell option to the option until I cancel this buy or stop sell limit or sell stop will remain active. Whenever the price after one order, this order will be active. So what is alternative? We called for so day. In this day, this order will expire and trigger. If order triggered by the end of the day, it will automatically be held. We call that order type sub-order type. Good day, GT, then we earn GDC will cancel, then GFT, then we earn, then after that OCO. Now, for example, I placed a buy and also set a buy stop. So where I stop, then means or the market is in a range consolidation. I expected if it's up, it's going upside. It will keep going downside. So I stop on both sides. I have added a condition to it. Added the sub-order type called when one the other will be the sell stop dead. If the buy stop is activated automatically, the stop will be cancelled. We call that order type OCO. One cancels the other. Then we have OTO. One the second order. For example, I am layering or stacking. I have one position activated and the other position otherwise it will be active. Another we also limit. Now sales limit we have. Now our price will be for example, we are saying that at UGP 150. Now I have set a sales stop limit that when the price touches 150 I'm stuck in a week, I will that will be the sales stop limit. We have an order type called we have UGP 150. I have there. Now my break it will be 150. I have stopped the limit 152 when it's 152 and 150. After confirmation, my buy order will it does not go up to 152 and comes back to 150 from 51.9. My order will not be triggered. So all our order types are complete. This was one order left, which I have discussed with you. Advantages of the market. Do market orders get passed? They execute quickly. Execution is though there is a high probability the order will fail. What is the side effect of an order? If there is a news event happening or the market is moving very fast, difference of microseconds or milliseconds between pressing the order button and its execution will occur. It affects the price. Sometimes we call it slippage language. So slippage 2. Chances of this in market execution order get very high. Now, what is the advantage of a limit order? A limit order will only execute when the price reaches your area and there is no space. But the issue with this is that the price may never return and your execution is not guaranteed. However, whenever execution happens, it will be at the exact price. But for this, you will need a lot of patience. Next, stop orders, exact like market orders, have a very high risk of slippage. In this CCAT, you have no control over the execution price or final price. Because when the market is moving in a fast direction, by the time your order is triggered and pressed, demand has gone into the market and supply has occurred. The difference that arises is shown in the order. Now, this difference does not occur in limit orders, so limit orders are safe.
Stop orders in very volatile, fast-moving markets are dangerous.
As decrease, GE, OCO, and what are all types meaning? We can categorize these independent types. For example, we said that a buy stop is GTC, good till cancelled. Until I close it, it won't close, but by changing category, I will make FD. Then it will become good for the day. That today, when the day expires, it will automatically or be cancelled. Similarly, O is also like this. We added the condition that it will automatically cancel stops, as I discussed earlier. These are all advantages and disadvantages. These are all order types. These are order types used to further edit them. These are such. This is such correct. Such orders are never used. This is always with any ultimate system. Next come to trading session.
Now we start with the trading who does the open who is trading at the time. Because our retail traders trade not move markets. Both markets were discussed in the first chapter. Banks, hedge funds, corporations, or financial institutions. Central bank. So we will discuss when these persons come online. We will bring this up in this session. First, the Forex market opens on Saturday. In any place in the world, it is Sunday. India, Pakistan, is most of the mid. The first that opens beginning of starts is the Sydney. The Sydney starts here. Then 2 hours later, we have the Tokyo session, which starts in Tokyo. Then says after 8 hours, and after 6 hours, London opens. Then you have London, and for 1 hour there is a crossover between London and Tokyo. After the hours, your London open, and ultimately 4 hours after your London open, 4 hours, 30. We have the New York open, then after we have the New York close, which is also the opening time. Now happens in which currency focus on what time trade and at what not trade. All these things we discussed now. Now on the session, the Asian session, and the most movements at the end of our sessions, European session, we cross over with the New York session. Sessions here and New York over with each other, and they cross over the liquidity and potential profit. And understood that in the global financial markets, New York, Singapore, and Hong Kong, 25% share the that is 50% of $7.5 trillion trends. New York, number 1 is London, number 2 is New York, number 3 is Hong Kong and Tokyo. Tokyo, Hong Kong, and Singapore all have an equal share. They almost difference. In the past, Tokyo had largest share, but now Singapore and Hong Kong have also become big markets. Now let's understand that Forex market is closed on Saturday and Sunday. Before Friday evening, this market opens 24 hours. In this market, there are certain times is inactivity, meaning very little activity. There is when there is activity, then the peak trading hour with a lot of movement and a lot of liquidity will come. There are times when we don't completely dead. Now there's more movement and liquidity or during the overlapping sessions. Now, all happens 8 p.m. Eastern time. After that, we London and New York overlap, which is from 8 a.m. 12 p.m. Eastern time. Now to see in local in respective country, because our unpacking of a quite large space, we have different time zones. We go and enter Eastern time Google to convert into our local time zone and find out when our market opening and closing. Each pair gives different positions, looking at Euro USD and Pound USD, which are European pairs, European currencies. So the United Kingdom is also located in Europe. Their movements are less during the London session. The movement in London, the session has the minimum move. Therefore, we discuss each currency, discuss each session in detail. This is why we is more strategic at the time. Now we have the Tokyo sessions. Tokyo session starts at the beginning of Forex at 12 a.m. Includes measures we discussed here: Japan, Singapore, and Hong Kong, Tokyo liquidity. Around 5 to Forex position is that 80% of transactions are happening now. 20% of the movement is happening in these hours. The time is most, but the movement is the least. Who are the market participants? Let's understand these. At this time, export countries are active. What are export countries? They send their products to other countries. In this day, we have China is the biggest manufacturer in the world. At this time, we have Japan, also a manufacturer. Then we have Australia and New Zealand. They are also major crop materials and agriculture. Also, are companies, exporters, and central banks. These countries, which are New Zealand, Japan, the central banks, these are the major banks who are active at this time. So now, which currency should we trade at this time? This is easy question. Is the country that will be open at this time? Most probably, it will be the most time. This Australia. Then we have the traders, which are active at this time, and we can trade them. There are some in the Tokyo session to identify the liquidity at this time. As we discussed, it is very low. So in trading, most usually do not have we do not have 100% confirm. What we have most of them is that remaining OCs relate to that related Asia. We can strong moves in the at that time. There is economic data time move after that the market goes down. Then, for example, when China's data is about to be it will move 6 to 3 hours after the remains of the Asian session. It will kind of become dead. And it's a very strong move in the session. Then probably we will consolidation Asian session. We have US data in the session. One is the biggest market move is the economic data from the biggest market. The Asian and you have other. We start with the trade timings. When does the trade market open and who is trading at that time? Because we are retail traders. Retail traders do not move the markets. Those who move the markets were in the first chapter. Banks, hedge funds, corporations, or financial institutions. Central bank. So now we will see these participants come online. We'll bring this up in this session. First, the Forex market opens on Saturday. In many places in the world is Sunday. Yeah, Pakistan, Monday. That is almost after Sunday midnight. Monday morning start. The session opens where the beginning of 4 hours is Sydney time. The session starts in Australia. Then 2 hours later, we have the Tokyo session, which starts in Tokyo, Japan. And starts after hours, that after 6 hours, our London session opens. Then in London for 1 hour, there is a crossover between London and Tokyo. After that, probably 4 hours after your London open, and then approximately 4.5 hours after your London open, 4 hours, 30 minutes. We have the New York Open, which is almost the same open. So now, what happens in this case? Which currency pays to focus on at one trade and at one not to trade? All these things we'll discuss now. Now the session, the European session, and the most movement happens at our London session, European session, and when it crosses over with the New York session. These 3 sessions, Asian, European, and American, New York, cross over with each other. When they cross over, there's high liquidity and high potential profit. And understand this, that in the global financial markets, London, New York, and Hong Kong have a 5% share. That is 75% of $70 in daily transactions. London, New York, number 1 is London, number 2 is New York, number 3 is Singapore, Hong Kong. Now Tokyo, Hong Kong, and Singapore an equal share. There will be almost a few differences. In the past, Tokyo had largest share during Asia. Now Singapore and Hong Kong have also become markets. Lesson at the Forex market. It is closed on Saturday and Sunday. Before Friday, in the market was 24 hours. In this market, there are systems with this activity, main activity. There are people where there will be a lot of movement, a lot of liquid will come. Then it becomes completely dead. Now the times with more movement and liquidity are during the sessions. Now, the session overlap happens at 2 times. One is the Tokyo and London overlap. It occurs from 3 to 4 a.m. Eastern time. After that, we have New York overlap. From a.m. to 12 Eastern time. Not in local time in your respective country. Because India and Pakistan cover quite a large space. We have different zones everywhere. We go and enter Eastern time in Google to complete open, and we find when our markets are open closing. Understand that each pair is different movements in different nations. For example, USD and USD, which are European-based currencies. The UK, United Kingdom, is located in Europe. Their movements are less in the London session. The movement in New York. Their session has the minimum movement. Therefore, when it's currency detail, we'll session timely, we'll discuss which currency is more active liquid at the time. Now we have the sessions first. Tokyo at the beginning at 12 a.m. GT. With Japan, Hong Kong joining Tokyo liquidity around 20% of liquidity participation of this session. 80% of our sessions have inside 50% is happening in 10 hours. The time is the most, movement is the least. Who are participants in the system? Let's understand this. This time, exporters are happy. What are export countries? They are that send their products to other countries. China is the biggest manufacturer in the whole world. It is time. Then we have Japan manufacturer, and they are also major exporters of raw materials. The main participants are companies, exporters, and central banks. In these countries, which are Australia, New Zealand, Japan, Singapore, Hong Kong, China, the central banks of these countries, the major banks are not active at this time. So we see trade. This is an easy question. The very easy answer is the conduct at this time. Most will be most liquid at the time. We have the Australian dollar. We have the others. Then we have the Japanese and their rate pairs, which are very active at this time, and we can trade them. Most to identify the lead this time. As discussed, it is very low. Most probably, most usually do not have the word definitely. We do not have the word 100% confirmed. What we have most of the time is that markets remain range because only those currencies related to Asia. We can get strong because the participants are active at and during the session and there is economic movement that goes down. For example, when China's data is about to be released, the market will move significantly 2 to 3 hours after that. Then during the remaining 5 hours, it will kind of become dead. And the second feature is that if we get a very strong move in the New York session, most probably we will see consolidation. In this, the biggest market movement of data, just like we have US the biggest market mover in session, that is the biggest market. After the Asian session ends, then you have the London shown that over Asian session with New York, London, which is the largest and fifth segment transaction. This is volume. So if we are using a broker with a value, then this is because we will spread at them. And your feet, then also building opportunities more at this time. The market participants was there. Exports, central banks, and Australia, New Zealand. If we had time, there are major parties of the government. Mean what are good in the participation. If we count the Euro today, the GDP after the US, when all countries have opened up, participating in the economy will start. Specific areas, behind this moment, and often at the beginning of the trade session, until the session goes to the New York. In this, wages are going to be traded and European with USD, Euro, GSD, CF, because whenever you go Google to my local time, tell you your local time, and about the extension worldwide. So we are 7 in these 3 London, New York, Tokyo, and Singapore. So check 23 plus 23 is only with New York. 20% it's divided in not including New York, especially the time the because Americans highly active and people moves. Now the shift in 3 we have mornings 8 a.m. 12 a.m. most over London. They're across London, most has the most work. We have short to 3 EST. These traders go on and in your sunset going on that they will come more in the afternoon PM stock market closes and activities of. So what do we have to do? We have the stock market closes PM market now that's in the New York not amazing. We also on the shares those are shares for privacy. But yes, in New York there are a lot of moves. Dollar the dollar king in Forex over the dollar even to the dollar and give you drastic round to avoid that. Now we know what the conditions are and what their titles are. Now we reach the conclusion about what are the best rates we should be. Let's discuss them. Degrees for market. So what is the best time to trade on overlap 8 a.m. 12 EST? Most active and the best time to trade. Similar trade. Volatility is the Tuesday Thursday have the most and trade. Meaning Monday morning we should not trade Monday. Have every other reason not to break the forecast. Especially we need to understand one. We should use events because we need to have what the price will be. From state up, the price goes up and get stuck in a wrong time for you to get out of there. Sometimes the hard work of them. That's why we didn't trade at a time. There is low liquidity. It will make the unexpected move. So avoid it and trade during overlapping time. We have to Forex times. We focus on time. In front of we cannot just for 24 hours. We cannot focus in the morning. Where they are meeting our low, we have to do we have it for 8 hours. You have to select an Asian. Apart from 8 hours, you know it's you take your phone, you keep at the charts. You make a decision over trade, make the broker happy or broker when the will not grow. Round session overlap with the Asian session is Tokyo and over with Boston with New York. London, which is the largest trading high liquidity and 50% of the government transactions. This time has the highest volume. We read earlier, this is the
Best because we will get the lowest spread this time. If we are using spread, we will get more trading opportunities, more movement, more rate upside. Industry markets, companies, the central banks, and Australia, New Zealand. Even to that, there are banks, financial large banks in the world. They are participating funds, corporations. The main financial government will be there. The world's largest economy will be involved in participation. Because even the Eurozone too, it has a GDP after the US. So when all those countries open up, participation in the economy will start. What are the specifics in this? We have high volume in this, more movement, and often our trend starts at the beginning of the trade session, which until the session, in the New York session. Depending on the spreads are lower in this, and which measures are going to be traded, the US dollar and European currencies, and it is we have Euro USD, Pound USD, USD, JPY Cross, Euro J Pound, JPY USD. New York session starts at 8 a.m. EST as I expert. Wherever you say go to an GST local time, and for extra derivatively, about 7% of Forex transactions happen in the New York session worldwide. So we understand 75% overall. There's New York, Tokyo, Hong Kong, and Singapore. In the understood the share, London 20% is with 7% is only with New York. 2% is on one. It's like different countries. The New European offers high liquidity. We call this the North American session. Highly active and pivotal for market moves. Now, the New York session is divided into three parts. We have the morning session 8 a.m. to 12 p.m. EST. Most action over then. There is a crossover. It is most over 2 p.m. 3 p.m. EST. In this case, for lunch and London market, so in New York session. In the London session, the trend that has been going on, most probably we will get its counter trend move or its correction and relay. So we have that session from 1 p.m. 4 p.m. Then when the stock market closes, the market down that we cools off. We have to have the market closes 4 p.m. We should not trade. Equity is down. The best trade in the box is not, which are those pairs that focus on the dollar, and the best pairs are those pairs market. Those are London pairs, for example, Euro USD, Pound USD. Yes, in the New York session there are a lot of moves. The dollar plays very good in Forex sessions. We focus on the dollar. The rated dollar can give drastically large moves. You need to avoid them and stay away from those that can give us a lot of fluctuations. Now we have learned what the time sessions are and what the different times are. Now we have to reach the conclusion about what I trade. We will discuss the worst themes, the names we should trade. Let's discuss. Okay, first, as we discussed, liquidity is essential for market movement. So what is the trade? New York and London over 8-12 EST. Most active and volatile time. Tokyo and London is the best time to trade. Both are open. Similarly, which are the best trade? The best trade with the highest volatility is the date we have. Wednesday, Thursday, the movement and the worst days to trade. Sunday meaning Monday morning Asian session. We should not trade on Monday. We have to avoid that. And the time when London closes. New York people on breaks. Take a day. We avoid the past. Especially, we need to understand one thing. We should not be doing news. The news, if we heard what the market really, what the action will be. We not read that the time it happens, the polls often get up in a wrong position. For you to get out of there, your entire week gets wasted. Sometimes half of an hour in vain. That's what we didn't trade at time. During the main close holidays, there is liquidity. Factors emerge from these. Either the price won't move at all, or when it does move, it will be move. We have to discuss news events. Or during overlapping times, we should not trade on weekend holidays. We have their precious time is money. We manage our time. We have focus on time. We cannot sit in the chart for 24 hours. We cannot chase the price for 24 hours. We have to decide when to. The focus morning will be on the most liquid time. So where sessions are overlapping, they are meeting our local time. If it or the rest have 8 hours, you have to trade an Asian or apart from 8 hours, you have to rest. You have to ignore it. You take off. You make a lot of wrong decisions and you will do a lot of over trading. They make the broker happy or the participants are happy, but your account will not grow. Today we will discuss what we get from the Forex market to understand what each person is doing, get what their needs are. Well, just Forex is a decentralized market, not a declaration for it. How can we determine its rate? Only one person decide. Financial institutions made banks will supply the other. The market rate
that's formed determined to move based on that. So understand that environment is aging. So bank in this our bank and its numbers with Citi, Morgan, Goldman Sachs, UK Bank. Is a very so the what is EBS electronic bridge we divider party provide licenses to the bank thing leader party to sell some in the world. You need to sell that you want to sell something to a buyer outside to buy it. Major boom. Now, if they want to take their profit, they need for that. Now, provide cover. Any brokerage provides it. Basically, what they provide at the box. Add their selling as they need without you will be convinced of brokers the help that my friend you think you selling for that different and different markets also when you into that something extremely cheap you. For example, gold made us involvement for 2007. Now buying a 2006 reason B. The risks that a cost created for you. You don't want to just buy investors, banks, and supported multiples by banks. Except from your money deep. This does not mean that gold will go down or up. The purpose gate issues something expensive or cheap as the job liquidity providers. After we have medium-sized markets, then we have miners, retailers, oil companies, all in the markets create their demand. Then I follow up with real traders make anything from market movement. As we is all trading, we get you 100 to 300 billion buying dollars. Its daily trading volume is $7.5. So we have no standing in. Now, why am I emphasizing this? The purpose is our sales. The purpose is they want to do how they would end trends. We have to follow this. There is something else. This what is called that imagine is what you have to deposit and security. If your level is 1 to 1 and you have bought a lot of your USD, then $1 completely. So your entire margin is bought. You buy the requirement purchase is 500,000 for you. If your level is 1, then you're in dollars. That thing that you have assuming you can make the trade. If you have opened a lot which consists of 100, what will happen in the regardless of whether you go loss. Until that trade is closed, is another trade. You have count, and the trade cost to discuss what benefit we get from this market structure, understand what person is doing this market, what their capacity is, what they are capable of, and what their needs are. What requirements we have to operate in each market. As we said, the voice is not a there's no central exchange. How we determine its rate in that? Only one person rate will decide. Because financial institutions, major banks will send supply and demand. The intermediate rate that's formed will be the market will boost on that. So we understand that in this environment, most real influence will be. So major banks, our opinion, which are large banks, access this market. In this market, the biggest buyers and its largest market movers. We have examples of banks like Citibank, JP Morgan, Goldman Sachs, Justice Bank, UBS Bank. Banks have been the hierarchy is EBS. What is EBS? EBS, electronic brokerage services. Being provider, being counterparty provider. Now, what is necessary to understand is how the bank something. If they want to sell it, they need a counterparty to sell it to. Something in the world who is ready to sell that thing. And you sell something, you need a buyer outside. A major bank bought something. Now, if they want to take their feed, they need that. Now, who brought that party? Electronic brokerage prices. Basically, what the bank wants to profit. So, at the top, they were given selling and they need buyers. And at the bottom, given buying. And if they need it, will be counterparty, you or me. Will be by the help of liquidity that you see for that different methods and influences that different market movements are also, which you can even to. For example, it doesn't about movement from 1,000 to 2,000. Now buying 2,600 cheap to you. The reason being, this concept was created for you. Not was created. Your subconscious is being worked by many investors, by many banks, and such movements are multi-bank concept from in your mind that is expensive or cheap. For example, just an example. This does not mean that now will go down or up. The purpose is to get subconscious that something is expensive as liquidity providers. After that, we have dim moments, and we have miners, funds, companies, all the markets create spending. In the do not make anything from market movement. As we read earlier, this is about 9% of the total volume. 200 billion buying oil traders,
and the market's daily trading volume is $7.5 billion. So we have something in now. I think the purpose is not to trade ourselves. The purpose is to try to understand what the big banks want to do, and we need to recognize their moves, identify them ahead of time, and follow the trends they create. We have to follow their wishes. That's all trading, nothing else. Now, like on the margin trading, we discussed all things, how marriages work. We discuss all that. Imagine what you have to deposit as a guarantee or agree with the bank. That's called margin. If they don't want an important standard law to use, then allows a completely block your margin. But if for example, the requirement is 500,000 for you, if leverage is 100, then you must require dollars to place that trade or placing the trade. You have to with further trades. But if you have opened a lot which is of 100,000, what happens? The issue will be that your entire volume to multiplier. Regardless of where you go into first, until it is closed, you cannot really have money in account. Sometimes you place a trade and the trade is not placed because your margin is good. To discuss what benefit we have for a market structure, to understand each is doing in this market, what they're capable of, and what market. As earlier, Forex is not dictatorship, there's central exchange for it. How we make rate in that? You can see only one earn rate with financial institutions made by the immediate rate as form will be determined with. So the environment more influence we have is from banks. The biggest our peer means large banks, the biggest largest market mover. We have banks, Goldman Sachs, in this way, what EBS leader is necessary to this. Think about something to link the comparative to think in the world. You need a cell who is ready to think and want something outside with it. Make the profit. Now, EBS provides it, and when they provide a party, basically is the block will take profit. So, given party, you will be help of the liquidity that my friend you think these influence that market are you that even some see you. From 2000 to 2000, the reason is that a concept was created. You don't get just be by many banks and on such awarded type concept in mind is this deep will go. The purpose in your extensive job of leaders after them and we are marketers, retailers, currently markets and demand. The traders do not make profit. We want to be binding relay. The marketing volume is 5 billion. So no the purpose is try to understand what we want to do, how it and we need to and follow the we have to follow all the engine is what you use it as a guarantee with that average is what you have a lot you use so in margin but if you buy the government which is 500,000 for you the average is 100 is in the better place have the you can make it but on a standard which costs of 100,000 happens the your deposit margin right where would fit on the is place your we discuss what benefit we have from discussing Forex, to understand what is to be market, what capacities are capable of, and what requirements to operate in it. Because the Forex is a market, it is a simple, there is no simple exchange rate. How can we determine rate in as you can see, only one rate will decide. Financial institutions supply and demand each other. Freedom rate will be determined. The market will be based on that. So, within the environment, the most real influence of banks. So, major banks, the biggest in this our main banks, which are large access market, is market biggest supplier and large market movers. We have example bank, Citibank, JP Morgan, Access Bank, BS Bank. In this very is also the EBS. What is EBS? EBS letter brokerage. Liquid. Now it's necessary to understand this. The bank bought something. Now if you want to sell it, they need a counterparty to sell. That is something in the world. You need a seller who is ready to sell the thing. And if you want to sell something, you buyer to buy it. Now, if you sell, the counterparty for that. Now, provide that counterparty. Yes, ethnic brokerage services provides it, and when they provide what do is the bonds to take profit at the top of the bond. So they were given selling and asset, and at the bottom given buying and asset. If they need it, what will happen? Who will be the party? You will be the help of brokers, the different methods of influence that different market movements are also used. When you can think of expensive to you. A bit of a movement from 2000 to 2700, now being at 2600 being. That concept was created. You don't know it was created. Your subconscious is by many influencers, by many and charts, reward multiplies by a constant for mind that is very fragile. Just now will go down or up. That is to create that is job of lead providers. After that, with mediums, normal banks, and real market makers, hedge funds, commercial companies, all these move the market segment. Then the real traders who do not make anything from that movement. Earlier is 9% of the total we have $100 billion going retail traders. And the daily trading is $5 billion. So in the purpose is to trade ourselves. The purpose is to understand trading the big to do how they do it, and we need to move them ahead of time for the trends they create. We have followed this. That's anything else. Now the second margin we discuss the bag of things we discuss in margin what you deposit as a with the bank of margin. If your leverage 1 to 100, you have a lot of your using your entire margin, but you buy a requirement for purchase is 500,000 for you. If your leverage is 1 to 100, then your margin required in dollars. To place that after placing it, you have dollars remaining on which you can make further trades. But if happens which consists of 100,000 units, the issue will be will go into the margin requirement. Of whether loss. Until you cannot be sometimes you are placing a trade and the trade does not place because margin is exhausted.
Standard lottery requirement. When not fulfilled by $1,000 will start going message broke. That will be is that you require to pay in play $1 from you. Whatever position of this is going, you have gone in the broker that's zero margin, or they might on you, but it does zero. Is if what it do come down automatically that your mind over because your stop by setting with skull trade the outside get into always match your efforts will loss you with analysis or structure with reaction at one inactive socket orders. How do you into all these things? Now we have to trade which we call game. But if you feel the bet, there are any betting available to them. Go there, place a bet on a match or an election to make a bet. You will understand the analysis of analysis. Decisions charts when decision that is one we have is one analysis by an economy determine if the currency will also perform well. The country is full. So what do we have next? What is market? What all the retail do now? We continue because historical analysis coming chaps gives and make sure our GDP. If the country is doing well, it's after there is the GDP is the people have jobs or is employed. In this event, what we could stage or high inflation inflation is very often the economy speed so we bring for fancy then we check the deadlines and they determine how if the rate does it have on the and 0.5% annually right now is holding no will happen is that when that currency is both demand will increase and the supply things rising all these countries now we have to do is critical kind of policy happens if this way is moving 2 years 3 it's continued is used from to standard on USA this requirement of not fulfilled by $1,000 if my position is going plus we redeem a broker that will be the margin call at required balance we need keep it as $1,000 from you. Whatever is going in is you have an $800 then the now what is the access that has by way on the margin they might not give you but they don't close your position until your balance touches zero. Excel brokers what they do is if you example all dollars require margin keep the will do if the trade the margin is over margin call of now to trade size small do not always manage your risk everything that is going to happen 100% confirmed. You think if you do not set loss, if you say to go up, you'll be placing them in the same direction. You have to manage. So with these types of analysis to the fund who is doing Forex? What is market close? Analyze market active, inactive. How many targets are there?
What's average? What is bid ask?
What is spread? How do we calculate it? How to determine it? How convert the value into dollars? After discussing all these things, now we have to rate based analysis. Analysis is gambling. With the judgment, which we call gambling. If you want to gamble, the best way is to go on bet or any bet. There are any applications available. Go to them. Go there and to place a bet on a cricket match or an election money. Suppose it's not bet. If you gamble, you will see there you will save money. That's what you need to understand. It's not without analysis. There are three analysis.
This is looking at charts.
What are three data that make decisions shown and spots where decisions made? It is called technical analysis. What we have is fundamental analysis. Fundamental analysis. Decisions are made by local makers, the economy, and hash determine that the condition will succeed also well. If the country's conditions is currency will underperform.
So what do we have next? Market sentiment, market mood. What is market mood? What is the market? What are all the retail traders doing and how do we do that?
What will see people open? So we continue discussing. First, we have fundamental analysis. We will also do fundamental analysis. We will do its details and the explanation. Indicators use fundamental analysis RD. It grows to GDP, country well, produce good, then it is strong. After there's the employee data. If the GDP is good, there is employment or are sitting unemployed. If there is more employment, the conditions are good and third inflation. We call inflation. If it is high. If inflation is high, then it is going and stop. It needs to be done. It needs to be brought into balance. Inflation is low and the suffering condition. Then the economy goes to data. If the economic wind inflation is high and the suffering protection and should be managed accordingly. So with these economic goes for fundamental analysis. And then what do this mean? The central bank policy and interest rate, they set deposits. They interest rate increase effect on the currency. For example, someone goes for dollar bonds for years, hold them, and the rate is 5%. The return on holding income, and if the rate now is 0 or negative, then holding the currency will yield return at all. So what will happen is the attraction will diminish, and obviously the which will return, everyone will buy it.
The currency demand will increase, currency will increase.
As long as its supply is increased, the entire political globe. Whether it's an or a result, regardlessly by the action of the country. Additionally, if there is a war, a disaster, an event, alliance for a breaking, or a rebellion, or all the economy. Now, what we do with trading, we look at it and we figure, like this kind of situation arises. It starts improving. The year, 2 years, 3 years, it's going to improve into Australia, its currency will drop. So it will be perfect for us. So it's a long term or for investment, for long term currency. On your the current line is $10,000 will be that call on your mini which pays $1. Now the position is goodness, and for example you have gone mine will start depending on the voices and class until zero margin. They might not give a margin they open until your balance touches zero, but is margin keep the what with 5,000 on it automatically trails your margin is over. How to avoid a margin your growth we call what is achieved now. How to setting up making margin with keep the now you do that this different confirming automatically if you say to I want another trade the net trade so I have to make this stuff as will but we can see at the market close one market how more there how we calculate it, how to determine convert value in after discuss these things. Now we have to take analysis to management. If you want the to go back any expect there are many applications available with them. Save one analysis directly by looking at chart making decisions is also analysis one of analysis. This is by economics, the country's economy, currency performance.
What are the traders doing and do that?
We discuss analysis in the chapter. Leaders use the analysis. If the country is doing obviously be strong. After that, the data. If it is good, then how is the have jobs or are they going to inflation? What we call inflation or inflation and stop. It needs to be so it needs to be brought inflation is inflation is from stagnation. So check for fund analysis and then do check this mujib. Then I see the interest now it affects the currency. For example, now as 5, then they point for the so it happens that season will without return everyone. where its selection of is related by images, such as war, a desert, land forming, or king, or all these. Now, if this kind of situation arises, if are improving, then in 1 year, this get in the business into years for us. So we like our requirement. When this requirement is $1,000 will the position is going to receive a main broker. That margin call. What the margin call will is that which was $1,000 from you. Whatever yours going for example to minus the before. Then on broker is access. The access that the broker has minus 0 might not give a margin call to you, but they don't close your position to the 0 best. Because what they do if your margin is $1,000 and your mind though how to avoid a margin that occurs and your broker closes the trade, we call it a stop out. Stop out. Now how to avoid out? Keep the everything depend to keep it 100% from you not set a stop loss. You say to I wanted another trade the trade. You be 7 so you manage all this. So this type analysis will the market with it. Who's in Forex? At what time does the market close? At what time is the market active? How many types of market orders are there? What's the rich? What's the ask? What is the spread? How do we to determine it? How can the value into dollars? First, all these things. We based on analysis. In analysis, equivalent. Trading the management is gambling, which we call gambling. If you gamble, the way to go at there are available. Go and a better market annihilation. The if you gamble, you will come lose there. You might save money. So it's important to understand trade, not the analysis, what analysis, one analysis are charts. Making decisions is shown in candle charts when it's analysis. The second one is analysis. Fundamental analysis are made by economic factors. The economy is considerable for the bad. These are C1 form. So what is the Fed doing? What are our retail traders doing? And how do we use that? We don't have all. We continue this thing. First, we have fundamental analysis. We will discuss fundamental analysis indicators. Indicator used for fundamental are GDP, domestic product, GDP of fuel. Then should be strong. There's the data. Then show the country are all easy to see if it is low, high. Then it's going fast, and it needs to be slowed down. It needs to be if inflation is low and the country is suffering from deflation, then they need to the if the GDP economy is weak, the country is suffering from deflation. It should be measured. So we have this economic indicator for the rate is the interest rate. They say they are now the rate what have for example swap will stay hold them. The rate is they get 4.5 annually. The will come, and if a country is in trade like the is zero or negative, the holding currency will get no return. So what then is the immediately dollar will buy. And as it's like whether it's an election or a result, the trade is made by the enemy. It matters. Actually, is war, disaster, or an event like an alliance forming or occurring, all these affect and reason. Now, what do we do with these things in trading? In trading, create a long picture like polyprice. If this starts improving, then in 1 year, 2 years, 3 years, they get better. When the condition of it improves into outcome strong, so it will be perfect for so as a or for long-term investment. Analysis is fundamental analysis. Today we'll take what of the price is and what it will do. All the distance and moves are charts. What is that we to know maybe out is on the shy because a human is really habitable in the 50,000 years history itself a simple lapse will itself similarly the support and the price of where the price of so when the price is probably technicals the study the future but trade on understanding if we will understand things understand part the span of the charts you are able to read the as they cannot read charts you have to say the go in this what price go not every is different things the charts and the tools you understand we have channel, we have fortunes, we have ICD, and we have fundamentals. Now, but fundamentals, we need to say this, okay, do you accept it or not? It's totally wrong. Now we need to confirm 100 confirm. As we if the price will go. Price action is all three set to go against what are thinking. So there will be the price. It does not to extent. It cannot stand to use and please indicate now for in the is going to because this comes to this point. Now, what do we have to call all three now? Let's use everyone still just why economics, the health, scientific to come everything and things our have one and it can back and is to get fundamental analysis. They will focus. This price movement. They see what the question of the price is and what it will be in the now, all the decisions and movements of our movers are reflected on the charts. Was it that everything we know is present? Why? Because there is a history itself. So what happened before happened? If is 1,000, itself a civilization similarly on the resistance, the price reacted, or the price will the price or the price will. So when the price comes to that, more probably history will repeat itself. Just use this chart, but this chart. So if you based on the chart, but the period and understanding, if we will understand things. That's why there's a different each person's understanding. That's why we say that you spend as much time as you both are you ready to understand the nature of the chart. Once you press able to chart as it, you cannot chart as it. How is the trade? I will say that the price in direction. With the price, therefore, by looking at the chart, so we have to sit in to understand tools and the chart. We call them Fibonacci and lines. We have else, we have hands, we have support, we have resistance, we have indicators, RSI, bands, AC, and you have getting. It helps in analysis. What the purpose of analysis? Now, by understanding sentiment analysis, we need to see what people are often saying. Therefore, trading, a truth, whether it's it or not, is not a case that most traders are wrong. Those who are often doing retail trade are incorrect. Now, most people on the bank is not 100% just in trade. The rate that the price is to go up. Most probabilities are that the price will go up. The price action does not always tell us. Price action is sentiment and along. It tells us about traders' psychology and so to go buying most probably what they're actually doing. So we retrade alone. It will become too extreme and we is an indicator. For example, this time we have 40% are sellers, 60% example. What if people are selling? It means Euro USD is going to rise. Similarly, if it were what would it mean? Euro USD. We understand the thing. Now we have to combine all three analyses. Now let's simplify their own life. Blended using essential why analysis shows chart movements. That the market is badly. And if we don't come, our thing won't have stability. If we lean on this, can backfire a lot, and if it backfires, we can suffer loss. It tells the mental sentiment together. Take a trader for this movement by seeing what in the future. All instances of what does it mean to know for decisions of spend? Why? History. So what before we you can say for 50 years, 1 year, 9,000 years, will build that end. It's important the price of area will read today. The price comes to more tells us the past these jobs. Because every has experience and understand people look at the chart, they understand different. That's why there's that's why you spend as possible. The chart, you trade. Once you build the chart, once you have listed all the whether the price go everything. By looking at we have to understand in that we have channel patterns, we have support, RID, bands, it helps us and chart. No, but that's what it's not going most traders wrong. Those who are trading now what it is that most people is just earlier in the high that the most traders are wrong. How it's working and most need the price it can okay. So we need to read sentiment. Now for example, this time I will what does it mean?